panel of judges were appearing skeptical of the SEC's arguments during an appeals court hearing in Grayscale's ongoing bid to convert its Grayscale Bitcoin Trust into an ETF. Now, Grayscale and CoinDesk are both owned by Digital Currency Group, just a note to viewers. But joining us now to discuss this story further is the Chief Legal Officer of Grayscale Investments. We've got Craig Salm. Craig, thanks so much for joining us. So everyone in the crypto industry was paying attention to the court hearing yesterday when Judge Rao asked a number of questions about futures prices contrasting with spot prices in the Bitcoin market. We have a clip from the courtroom. Let's have a listen.
It seems to me that what the commission really needs to explain is how it understands the relationship between Bitcoin futures and the spot price of Bitcoin. Because it seems to me that these things, one is just essentially a derivative of the other. They move together in 99.9% of the time. So where's the gap in the commission's view?
And the other judges also asked a number of questions ranging from the legal defense by the SEC to how it evaluated the tests it used to reject Grayscale's bid for an ETF. Your initial reaction after this hearing?
Yeah, so first of all, thank you for having me and happy International Women's Day. The clip you just played really nailed the arguments that we've been making all along, which is that you have the spot Bitcoin market and the Bitcoin futures market. The futures derive their pricing from the underlying spot markets, given that they are derivatives of spot Bitcoin. And so if we're going to have Bitcoin futures trading being approved by the SEC, how can we not also have spot Bitcoin ETFs be approved as well? That has been the foundation of our legal arguments that we made back in June when we first filed this lawsuit. And having the opportunity yesterday to present those oral arguments with Don Verrilli was just a really good next step in this process. And we came out of the court feeling very good about it.
So, Craig, do you think that some of at least the SEC's argument is mainly this, that they kind of turned a blind eye to whatever the CFTC was doing because it's a separate agency, and if they want to do whatever they're doing, they're just providing an ETF based on what the CFTC allows. But they themselves might not like this formula of an averaging and picking a price, et cetera, that you're using to determine the settlement rate. So is it just basically, is there something else going on here? Do you think that the SEC's other agenda has nothing to do really with selecting the spot price, but maybe more about questions about the integrity of the underlying Bitcoin market itself, and they're just saying, look, you know what, we'll allow the ETFs to go because the CFTC allows futures. Therefore, any ETF based on the futures ultimately is the CFTC's fault, not ours. But anything that's spot, we don't want to take the blame for whatever we're concerned about.
Yeah, so Lawrence, I can only get to what has been in the commission's disapproval orders and their briefs in the context of this appellate court litigation. And you're right that they have been focusing on that distinction in that the CME Bitcoin futures are regulated by the CFTC, which has surveillance over that marketplace. But that's really a distinction without a difference in the context of Bitcoin ETF approvals, because the commission itself even will say that the CME Bitcoin futures are influenced by the underlying spot Bitcoin markets. And so if you feel that surveillance of those markets is sufficient to account for fraud and manipulation in the underlying spot Bitcoin markets, well, that surveillance is sufficient to account for a spot Bitcoin ETF and the fraud or manipulation that could happen there. There are two like investment products that really do need to be treated the same. And yesterday, we think Don Verrilli really effectively laid out those arguments for the panel of judges.
We're noticing the Grayscale Bitcoin Trust discount has narrowed to below 35%, its lowest point since November 7th, according to TradingView data, after Tuesday's court hearing. So it looks like the market is pricing in or feeling that Grayscale is looking more favorable after Tuesday's arguments. But I guess the concern here is that could the judge convince the SEC to walk back their approval of Bitcoin futures ETFs rather than approve a spot Bitcoin ETF and just eliminate exposure in ETFs to Bitcoin altogether?
So this is something that Don Verrilli also brought up yesterday in court. There's three possible outcomes that could follow us prevailing in the DC circuit. One, the commission could approve GBTC as a spot Bitcoin ETF, as well as other spot Bitcoin ETFs. We think that's really the right position that should be taken. Two, the commission could go back and continue to disapprove GBTC as an ETF on some new basis. I don't know what that new basis would be, and Don really did lay that out, given that GBTC is a SEC reporting company with qualified custody. We've been working with the commission over many years. It's already an investment product that's trading with investors. So unclear what that other reason could possibly be once you acknowledge that the CME surveillance can account for spot market potential fraud and manipulation. Or a third outcome is the commission could, in an effort to treat these products the same, disapprove those previously approved Bitcoin futures ETFs. I think that's also an unlikely outcome, given that the amount of disruption and really lack of investor protections that would do, because then you'd be further taking Bitcoin out of the regulatory perimeter. We think the best route here is really to bring it into the perimeter by approving spot Bitcoin ETFs, as well as allowing Bitcoin futures ETFs to exist too.
Craig, we've had you on the show before, and you've made a very articulate argument, which you're sort of making again now, which is that having a spot Bitcoin ETF is actually going to bring crypto into more of a regulatory framework and actually is better for investor protection. That argument totally makes sense. However, there's a whole political element to this, right? And right now, crypto has a huge black eye in Washington, where there's a hearing, I think tomorrow about this, and, with FTX and the fallout, and basically people don't like crypto in Washington. That's the sort of TLDR here. So given that context, that political context, regardless of the arguments that you're making that make sense, is there really any hope for a spot Bitcoin ETF anytime in the near future?
So, we challenged the SEC's decision when they denied our ETF because we felt this is really a question of law. Is the commission acting arbitrarily and capriciously in violation of the Administrative Procedure Act? And are they discriminating against issuers in violation of the Exchange Act by approving Bitcoin futures and denying spot Bitcoin? So a lot of those atmospherics that have happened within the broader Bitcoin and crypto industry following events like FTX really shouldn't impact that ultimate question of law that the panel of judges will be deciding. And then on the contrary, this is really a time where we should be having more regulation to protect investors within this asset class. And I would actually push back on Congress just not liking crypto. I think now we're seeing more of crypto is here to stay, Bitcoin is here to stay, and we're not going to be able to ban it. Conversely, what can we do to further regulate it and protect US investors and consumers? Spot Bitcoin ETFs are one very key way to do that.
Would that include conceding the spot markets to the SEC for all crypto, not just the kind of crypto that the SEC deems as securities, which is everything other than Bitcoin and ETH, and perhaps even ETH included? But would you be willing to let the SEC regulate spot Bitcoin trading, including oversight of all centralized exchanges in the United States?
We're all for more legislative actions that will bring more clarity to the asset class. Giving the SEC jurisdiction over spot Bitcoin trading is not necessary to have a spot Bitcoin ETF. Bitcoin is one of the cryptocurrencies that very clearly is not a security. It's a commodity, and that's been stated by SEC, CFTC officials over many years.
But what would you rather?
I don't know that it necessarily.
What would you rather? If the SEC says fine, we'll give you the ETF, but just let us run the spot markets here.
So last year and this year as well, there's several pieces of legislation that are making their way through Congress that I think rightly focus on the intermediaries rather than the assets themselves. And so how can we protect those that want to engage in this asset class? Well, let's focus on the exchanges, the custodians, the broker-dealers. I think that's the right way to approach it. And then these more difficult questions of which particular assets are commodities or securities or currency or something else are things that we can address over time. time, things like decentralized finance. So I think focusing on those intermediaries really is the thoughtful way to approach it.
But are you going to lose sleep if the SEC takes over the spot markets?
I think Bitcoin as a commodity rightly belongs within CFTC jurisdiction. There were bills that were really focused on that. But I think it's really more about the intermediaries rather than the particular assets themselves right now.
So there are two lawsuits against Grayscale that are related. There's FTX's sister company, Alameda Research. They have filed a lawsuit against Grayscale seeking injunctive relief to realize what it claims is over $250 million in assets for FTX debtors and their creditors. There's also hedge fund Tree suing Grayscale for details on GBTC. I'm wondering have you got into any further conversations with them? Because there seems to be some conversation among some folks who believe that, hey, wait a second, if Grayscale does get a spot Bitcoin ETF, it would actually be more beneficial than suing Grayscale and trying to get money back this other way. I wonder, so have you had any conversations with them any further, or any comment on how those lawsuits are going?
Yeah, so for anyone paying attention, being sued by Sam Bankman-Fried's former hedge fund for malfeasance is ironic to say the least. But you're absolutely right. The best way to unlock the value within GBTC because of the discount is to convert it into a spot Bitcoin ETF. And so I really think that energy, those resources should be not directed in these really misguided lawsuits and really focused on supporting the oral arguments we had yesterday and getting behind that lawsuit. That is the best long-term way for GBTC to track the value of its Bitcoin. That eliminates both discounts and premiums.
But have you had any conversations with them? Are they acquiescing in that regard at all, to that line of argument?
We're addressing these matters as they come up. Overall, I do think they are just pretty misguided. Really focusing on the conversion to an ETF is really the best long-term solution, but we're going to continue to defend ourselves vigorously against these matters that we did discuss last time, and there's similar ones that have come up in the interim.
All right, Craig. Thank you so much for joining us this morning. That was Grayscale Investments Chief Legal Officer Craig Salm.